just opening, first couple of minutes of trade. Our market master is Sanjeev Prasad, Managing Director and Co-Head at Kotak Institutional Equities. Sanjeev, great to have you with us here on the program as always. Thank you very much for your time. I mean, your thoughts, Sanjeev. I think you wrote a note saying, well, we're at a point where maybe earnings growth, etc., will stay strong, but perhaps also starts to taper off. But primarily, you're concerned about valuations once again. How are you looking at things at an aggregate level now, with the index being at about 17,500?
Yeah, so the issues in front of us is really valuations for the Indian market. It's already at 20 times 12 months forward. If you look at Nifty 50, EPS could be at least about 870 if you take the average for 523, 24. So on a 12-month basis, already at about 20 times. So that's the issue in front of us. Can anything surprise positively? Probably looks low, I would say. Chances of earnings upgrades don't look that great in this macro environment. Chances of bond yields or inflation surprising on the downside, I would also rule out for the time being. And things go wrong on the other hand, yes, of course, we still don't know how energy prices exactly behave in the winter months in the northern hemisphere. Presumably they will head higher. How much higher, we'll have to wait and see, and that can probably hold back a little banks from taking somewhat softer stance as far as inflation is concerned. So I don't think much will change over the next few months till the time we get more clarity on energy prices and in turn what it means for the inflation trajectory. So as of now, things look okay, I would say, for the economy. In fact, pretty decent for the economy, but I guess the view on the market is constrained simply by high valuations. Not just for the market, but if you look at on a bottom-up basis for quality/growth stocks that you typically want to own in India, they are all super expensive. Whether you look at any of the consumer staples, discretionary, retailing, any of the consumption places, it's so expensive. That's the whole challenge now.
Okay. Sanjeev, hi, good morning. We had this Reliance AGM yesterday, and they spoke about, going forward, how things will move, the succession plan as well. What's your house view on the stock? And I'm asking you because this is the biggest stock in the market.
No, we've had a positive view on the stock for some time. Fair value is about 3,000 rupees, so that doesn't change with announcements in the AGM. See, Reliance will always be, a stock where you will see there's announcements and it's clearly a growth company. So anybody looking at investing in Reliance from a free cash flow perspective will be disappointed on the AGM news. But as I was saying, ultimately Reliance focuses on growth, and periodically will have these big amounts of capex. So they are now getting into a new phase, which is on the 5G telecom capex, plus new investments in new energy segments. How much capex eventually we will figure out over the next few years. But these are really growth areas which the company identified, and I think there are immense opportunities in the new energy vertical, and Reliance seems very well positioned to participate in that, given the fact that it has the capital, it has the technology, it has the talent to achieve all that. So if there's one entity I would like to place the bets on in terms of the whole energy transformation which India will see over the next few decades, I think Reliance is very, very well placed over there.
Okay, so Reliance is all set to participate in the energy transformation of India. Yes, they have big investment plans as well, 75,000 crores over the next 5 years in their new energy vertical. By the way, the banks are just charging away right now. The bank Nifty is up almost 500 points. And Bajaj Finserv, IndusInd Bank, banks and NBFCs actually, that whole pocket. Axis Bank looking quite good. ICICI Bank in any case has been a strong stock, up 20% this year. Sanjeev, good morning. Your thoughts on financials. What is leading to such a big rally that we've seen over the last few months? And do you prefer banks over NBFCs now, or is it the other way around?
Again, financials is something where valuations have been more reasonable compared to other growth quality stocks in the market. Look at even something like ICICI Bank, which has been a outstanding performer over the last 2-3 years. On a 12-month forward basis, it's still about, let's say about a March 24 basis, about 2.3, 2.4 times adjusted for the value of its investment in all the subsidiaries. So it still looks like you have some more scope for re-rating over the next 12 months. Similarly, if you look at HDFC Bank, after the merger with HDFC, again, adjusted for the value of its investment in various subsidiaries, It is available about 2.2 times by 24 basis. So I think banks, at least the tier 1 banks, still have reasonable scope for rating. But tier 2, tier 3 banks and BFCs, they're all actually pretty inexpensively valued as of now. Most of them would be at about 1.2, 1.3. Some of them, let's say L&T or LIC Housing, are actually sub 1 as of now on a 12-month forward price to book basis. As of now, the situation was pretty decent for the financial names, including both banks and BFCs. I'm not differentiating too much between them, given the fact that credit quality is not an issue, at least for the next, for 24, 26 months. The rate growth should hopefully pick up as India enters into a multi-year investment cycle that we're hopeful about, both on housing as well as the private capex manufacturing side. So hopefully, credit growth also starts picking up. So I don't see any real challenges for the financial names. Of course, there are pockets where valuations have become pretty expensive. Something like the Bajaj Finance, 7.5 times 12-month forward price to book, outstanding company, but very, very expensive valuations. Similarly, Chola, again, very good company, about 4.5 times 12-month forward. So there are pockets where, for financial where valuations can pay their rich. But at least, the bulk of the names, we can still make a case for them, given the macro environment they're operating in, plus the valuations look pretty reasonable to attractive, I would say, for most of them.
Sanjeev, this is a broader question. I mean, from what I hear from you, valuations are the main challenge. I mean, otherwise things seem quite okay. Are things, and you've got a stellar research team, what do they tell you? Are in each of their sectors that they cover, companies that they talk to, is growth coming together in a very powerful way, which perhaps will lead to earnings, picking up over the course of the next couple of years? I mean, are there early indications of that? Because, I mean, generally, anecdotally, when we speak with people, that's the sense we get, that businesses are constrained for capacity. We speak with 3, 4 companies, and at least 1 or 2 say we're actually adding capacity in whatever sector we are speaking about. What is your sense?
See, at least over the next 12 to 15 months, I don't see growth being too much of a challenge, because from the post-pandemic lows, especially in some of the services sector, which were very badly affected by the pandemic, you will see a fairly sharp recovery. I'm talking about essentially physical sectors such as construction, hospitality, retailing, travel, tourism, transportation, where a bulk of Indian urban poor or rural people employed. These sectors were basically decimated by COVID. So you see a fairly sharp rebound. You're already seeing that over the last 6 months, and that will continue. So I think I wouldn't be too much concerned about recovery in basic consumption items, given the fact that the segments of the population which consume basic items, consumer staples, etc., they were pretty badly affected by COVID. Plus, food prices have been reasonably high. We are starting to see some inflation in food prices also of late. So hopefully that should support the rural, the agri part of rural India also. So I don't see growth being too much of an issue, at least over the next, let's say, 1.5, 2 years, simply based on the bound in parts of the economy. After that, we'll have to wait and see, as to how quickly does the private sector start investing. Based on all the good work the government done, we are pretty hopeful about reasonably large, investment by the private sector linked to other PLI schemes, etc., coming in by 525, say. And hopefully after that, India gets momentum in terms of getting into this virtual cycle of investment and consumption. And we have been talking about this. We have been pretty positive on a multi-year investment cycle, both housing as also private sector capex manufacturing. So hopefully all that will play out over the next 2 to 3 year time frame. So I don't think growth is an issue. You will see challenges in certain pockets. For example, consumer discretionary may be a bit soft for the next few quarters. But other than that, I don't see too much of an issue as far as growth is concerned in India.
Okay, since we're talking about consumption, Sanjeev, one space which has made a massive comeback is autos. All of a sudden, I mean, that's one space which is clearly in a bull market of its own now. But do you think the prices have run ahead of themselves, or is this a space where you are constructive on?
No, actually, we are somewhat negative on the auto space. More on the OEMs, I would say, we're pretty okay on the component names. But the struggle for me on the two-wheelers is that So this is a segment which is reaching, I would say, somewhere near peak penetration. I think over the next 5-7 years, I think India will be reasonably penetrated as far as two-wheeler penetration is concerned. So I think growth will inevitably slow down over here. On top of that, you're already seeing a fair amount of disruption from electric vehicles and two-wheelers. If you look at the cost economics of EV versus nice two-wheeler, EV is already pretty competitive over there, and you have a large number of players. Presumably, the incumbents will still be large players in EVs. But if you look at the financial returns which the incumbents make, that is very, very high. So I think this is a sector which is ripe for disruption. Growth is slowing down. So I don't know whether I want to pay such high valuations for this kind of growth profile, growth/probably declining return profile. If you look at the four-wheeler segment, essentially it's only Maruti here, to be honest with you, and it has its own set of challenges. It has lost a lot of market share in the segment which is growing, which is the SUV segment. They still continue to be very dominant in the LP segment, that is hatchback segment, but that's a segment which has actually declined significantly in terms of contribution to overall volumes. And you have a large number of very strong players now in the SUV segment. So how does Maruti make a clawback? We'll have to wait and see. The whole excitement around the auto space has been more to do with recovery in volumes, which anyway happens because volume participated in FY21, 22, and plus correction in metal prices. But I don't think that's enough for me to take a much more constructive view, at least in the two-wheelers and four-wheelers.
Just a quick word on the defense space as well. This whole aerospace and defense vertical has grown substantially. I mean, names like HAL have almost doubled this year. BEL is sitting at a fresh high. Is there more to go here?
Very hard, to be honest with you. These are ultimately government companies. There is only one buyer, which is the government of India. So as an outsider, it's very hard to get a good sense of the sustainability of the earnings of these companies. On what basis the contracts are given. Whether if you look at something like a BL, look at the return profile of the company is actually very, very handsome as of now. So whether that's sustainable in the future, I'm not very clear. Clearly, defense is a priority for India, so hopefully there will be no big change as far as the policy framework is concerned. But I don't know whether I can make that call.
Sanjeev, it's always a pleasure. Great speaking with you. Thank you very much for joining us here on CNBC-TV18 on this program. Thanks indeed. Well, the market is doing just